So we have already talked about operating and we have talked about investing. You could have told me that I made a mistake here. So this one is supposed to be financing. I don't think if you realized that. So this one was supposed to be financing. So that is what we are doing, because operating we did as the first thing. So that is a mistake I did. So we have financing activities. So under financing activities, I had already said we consider some equity items and some of their liabilities. So of which we had already started with ordinary shares. We combined with share premium. So I've taken my balance pro down of ordinary share capital and share premium. Then we have increased with the bonus issue which we issued. I've computed, and now we arrived at 100, and we can see the total is 1300. But if we consider with my balance carry down of 1500 plus 700, that is both ordinary share capital and share premium, we can see the figure is more. So why is this more? Because this one they received more cash because they issued shares. So if it could have been raised, let's say it was 1,000, we could have said that they paid cash and this was due to redemption of shares. So I could have written there, if it was, let's say it reduced from 1300 to 1,000. So the difference, that is 300, we could have said that it was concerning redemption of shares. So they paid cash of 300 to redeem their shares. But since it's an increase, we say that they received cash. Why? Because they issued shares. So that is what I was writing here under financing. So this is financing, not operating. I think you have written that in your short notes. So we record now cash received on issue of shares, on issue of shares. So cash received on issue of shares. So which means that is 900. So that is 900. So that is cash in. So we add. So after that, we move to the next thing. That is, after we are done with the first two items, we move to the next one, reserves. Reserves, we can't use it here because reserves is something set aside together for any future eventuality. So you don't have to consider this. Then retained profit. Retained profit, we can do a working on that in order to determine dividends paid to the parent. So dividends paid to the parent will be determined by a working I will do, of which retained profit is the one which will assist us to get it. So that is what will assist us to get that items. And that is fine. So let us now consider that retained profit. So retained profit balance pro down is, you can see it's 2760. So that is what I will write as my balance pro down in the working I will do. So we can do that working here. So this one we are done with that. So anyway, I can do in a new paper. So retained earnings. So this one will assist you to get the dividends paid to the parent. So my balance pro down I've said is 2760. That is 2760. Then I have to consider now profit for the year. You add. So for the year, but to who? To parent from P&L. So profit for the year to parent, because I've said this one will assist us to get dividends paid to the parent. So you consider the profit which was paid for the year, which was going to the parent. So you consider that from your income statement. So this one. So remember we got a profit of 1240. Of which out of 1240 we have 1160 which is going to the parent and 180 which is going to the NCI. So we consider this. We consider this 1160. So after 1160, there was something which was being transferred, of which I made a change because there was an error in this question. So we said that there was a transfer. According to note 5, there was this transfer, which was from the revaluation reserve, because this analysis concerning retained profit. So this transfer was from, not to, because this is a retained profit analysis they have made. So no way they could have said it's a transfer to. So this one was from. So this 20. So you have to add the 20. So the transfer of 20. So up to that point we have 39.40. So that was a transfer from. So that is why it is increasing this. So then we compare with balance carried down. So my balance carried down concerning retained profit is
3140.
So I think everybody is seeing where is that 140 coming from. So that 140 is the one which Samsung has picked from this point. That 140. So you can see the dividends paid is it reduced by so dividend paid is
800.
So that is 800. So that is the same figure. If you can go to your question, it was given, by the way. If you can go to your analysis down there, it was given. This one. By the end of that period, they paid a dividend of 800. Dividend paid, declared and paid 800. So, but now remember that there is something they provided in this question. We cannot say that the dividends paid direct to record is the 800, but there was something which was payable concerning dividend. So there's a dividend payable here. So, which means that we have to adjust again is that these dividends we have arrived at of 800. So dividend payable at the start is 400. So there was a dividend payable. So dividend payable, of which balance pro down is 800. It was 800 or 400. If I recorded wrong, you can correct me. It was dividend payable 400. It was 400. So that we can add this one for the year of 800. This one, the one we arrived at, the one we have from our previous working. So up to that point, we have 1200. So that we compare with balance carried down. We compare with balance carried down. So that we can be able to get the correct dividend paid, that is. So the balance carried down is 560. So that is 560. So you can say that dividend paid now is the correct figure. So dividend paid for the year is So 1200 minus 560. So this is the 64. So that is the correct one. So if there was no dividend payable figures, we could have recorded 800 as dividend paid. But since there was some element of dividend payable, we had to adjust. We had to adjust. So you can say a dividend paid by who? Parent. So 640. So this one we raise. That one we subtract. Then after that, remember that we are done with retained earnings. We move systematically. So after retained earnings, you can see another thing is, so we are done with these items under capital and reserves. So we can move next you can see this NCI, non-controlling interest. So again, you do a working on NCI to get dividends paid by that NCI to the shareholders. So dividend paid by NCI. So you use the NCI figures, the non-controlling interest figures. So my balance pro down is my balance pro down for NCI was 200. So you consider that balance pro down, the 200. So you write balance pro down, then you add the profit they received during the year. So this one, so this 80, this 80. So you profit for the year. So profit for the year of A. So up to that point, we have 280. So that balance carry down. So balance carry down is 270. I think I said that. We checked that. This one. This 270 here. So which means that the dividend paid is 10 because it was 280. It reduced to 270. So dividends paid there is 10, 10, 10. So that is 10. So this one, dividend paid, the difference. So dividend paid of 10. So by NCI. So that is 10. 10. So after we are done with the equity part, we move to liabilities. So liabilities, we consider what we have like debentures. We see if they acquired other debentures because debentures, those are like loans. So you can see we have debentures here. So did the debenture increase or decrease? It increased from 200 to 600. So which means that they acquired another debenture. So acquisition of debentures. So they acquired more loans. So there's a cash inflow of 400. So acquisition of debentures. So acquisition of debentures. So it was 200, it increased to 600. So 600 minus 200. So that is 4. So that is a cash inflow. So they acquired more loans. So what about bank loan? Did they acquire another bank loan or they paid? So you can see it reduced from 600 to 520. So which means that they paid a bank loan of 80. So the difference, they paid because it reduced. Repayment of bank loan. Repayment of bank loan. So repayment of bank loan by 80. So repayment. So under repayment is a cash outflow. Then finally, we have to consider interest paid. We have to consider interest paid. So interest paid, you have to consider if there's an accrued interest in your current liabilities. So if there is no accrued interest, you just go with your finance cost as an interest paid. But the best thing for this question, there was an accrued interest here. So at the start, it was 10. So 10, then you add what? The finance cost. That is for the year. The 60. Because I want to do it direct, you can understand. So you add your 60, which was finance cost for the year. So up to that point, we have 70. But at the end is 30. So which means they paid an interest of 40. So 10 plus 60. So you can say 10 plus 60, 10 plus 60. Then you compare with the balance carried down of 30. So the interest paid was 40. So which means that if there was no accrued, I could have recorded my interest paid as 60, the finance cost for the year. So that is how now we arrive at cash flow from financing. That is how we will be able to arrive at cash flow from financing activities. So cash flow from financing activities, that is, which figure do we have there?
610.
Others, are you getting 610?
Yes, 610.
Not, it's 530. Where are you getting 610 from?
530. It's 530.
So it's 900 minus 640 minus 10 minus plus 400 minus 80 minus 40. It's 530.
530.
530.
Yeah.
Yes. So the 1450 was B. So this is C. So net cash flow. So you add A plus B plus C. A plus B plus C. Your A was? Your A was which figure?
1290.
Your A was this 1290 from operating. So take 1290 plus, not plus, 1290 minus the 1450 from investing, then add 530 from financing activities. What figure are you getting?
370.
370.
So that is 370. So after that, you say add cash and cash equivalent brought down. So cash and cash equivalent balance brought down. Then you get cash and cash equivalent carried down. So in order to get cash and cash equivalent balance brought down, I need to consider my cash and cash equivalent items. So I will write here cash and cash equivalent. Who can be able to tell me some of the items of cash and cash equivalent?
Bank overdraft and cash.
Another one which is not present in this question. Another one. Short-term investment. Things like financial assets at fair value. So cash. So the figures we have is so cash, you can see it's 140 then dash. So you record the same way. 140 10 dash. Then bank overdraft.
$230.
On which 2012 or 20. So bank overdraft.
2012.
So dash then 230. So dash 230. Remember that the bank overdraft you raise. So which means that this one would be a negative of 230. Then this one will be 140. So which means that when we started our financial year, we started with an overdraft. So we had a negative cash outflow. We had a cash outflow, not an in of 230, but at the end we have 140. But the operations for the year gave us an amount of 370. So if you put your 230, so if you put your 230 here, under cash and cash equivalent brought down, you are negative 230. You are supposed to get the balance at the end of 140. Is that correct? If you take your 370 operations for the year, you minus 230. You are getting 140. So that is how you are supposed to do the indirect method. Any question? Any question concerning this question before I move to the direct method, because direct is just short? Any addition or you are fine? Sam, uko sawa?
I'm okay.
Joy, are you okay?
Yes, I'm okay.
Yes, Steve. Maria June.
Niko salama.
So we are together up to that point.
Yes, we are.
So let us do the remaining part, which is now direct method very fast. Then we can call it a day. So that we can call it a day. So I want to use my whiteboard, even if I have not cleared it. Anyway, I can be able to write on it with a different pen. So which means that I need to do direct method. So direct method. So when doing direct method, the only thing which would change in this question is just the operating. So you write the same heading. Uongozi limited, of which you would say consolidated statement of cash flow. Consolidated statement for the year.
Live streaming.
Sorry? Is there a question? So it was for the end, and it was ending which financial year? Our question, the
September
current year,
2013.
December 2013. So that is September, it's okay. So that is September 2013. So when you are doing, so I will be doing only the operating activities. One of the operating activities, you talk about cash received from customers. Cash received from customers. After the cash received from customers, I will talk about cash paid to suppliers and the cash paid to employees. Cash paid to employees. I will talk about cash paid to suppliers. Mute your microphone. So cash paid to supplier. So once I have the cash paid to employees and suppliers, those one I will subtract from cash received from customers so that I get cash generated from operations. Cash generated from operations. And after that, I will minus the tax paid. I will minus the tax paid. So now, the funny thing is that I think you know on how to get cash paid, or not cash paid, cash received from customers. What are your customers? Which account do you maintain for your customers? Debtors, eh?
Debtors.
So what you will do is all about you prepare debtors account. So that is what you will do. So to get cash received from customers, you prepare debtors account. So trade receivables account. So my balance pro down will be, and balance carry down.
$1360.
So my balance pro down there will be, so remember that for 2012 is the one for balance pro down. Then for 2013 is my balance carry down. So I think other guys, you are getting those figures. So that is 1360, 1980. So this one. 1360, and we have 1980. So that on my debit side is what increases the debtors balances, of which the sales which was meant, you assume they were on credit. So assume sales, they were on credit. So you say credit sales. So even if they have said revenue, you assume the revenue which we generated, it was from credit sales which we made. So go to your income statement, the sales or the revenue we record, we assume that it was from credit sales. This sales which is here, the 7640, you assume it was from credit sales. So you assume that. In some questions you would be told, but in some questions where they have not mentioned, you assume. So 7640, yeah? So it is increasing this your data. So it means that you sold on credit, you have not received the money. Then on your credit side is what can reduce your debtors balances. What can reduce the debtors balances? What can reduce your debtors balances?
Payable.
Hmm? You are saying something?
Returns inward.
Payables when there's paid.
So that is now what we are looking for, what they paid. So we have to check. So we have to check things like if there was a discount received or around discount around. If you around discount, but it will not be there. If you write off some of the dates, so bad dates, written off, so that now the balance you are getting is what you received. So cash received is what we were looking for. So you received how much? So that is what we are looking for. You received. So if you take your 1360 plus 7640,
70-20.
you received 70-20, the balancing figure.
Yes.
So that is what we record there, 70-20. Then cash paid to employees. Remember that your employees, these are like, let's say, sales agents, your admin, your accountant. So, and you know that all of these expenses concerning what you are paying them, under published, we say the expenses are classified under admin, selling and distribution, finance cost, or cost of sales. But now if you are paying these sales agents and some admin personnel, so under this you just consider admin expenses. So the admin expense, and you have to consider selling and distribution. So which they called operating, they called one name. They called it operating expenses. So it was operating expenses of, it was an operating expense of, that is from your income statement.
Six.
It was 600,
Yes.
600. So that is fine. So that is what you record here. So I have to check something before I conclude that. So before I conclude on that, employees, what they were paid, let us first do the cash paid to suppliers. Let us do cash paid to suppliers. So to get cash paid to suppliers, the first thing we have to do is all about, you have to determine credit. You have to determine credit purchases. So you have to determine credit purchases. So of which credit purchases, you know that cost of sales is equals to opening stock plus purchases minus closing stock. So I need to make purchases my subject of the formula. So purchases will be, so if I leave it on the other side, so it will be opening stock it will be opening stock or cost of sales. It will be cost of sales minus opening stock, because this is opening stock. So opening stock plus closing stock, because I've said cost of sales is equals to opening stock plus purchases minus cost of these are about cost of sales is equals to opening stock plus purchases minus closing stock. So in order to make purchase the subject of the formula, we start with purchases. So if we say cost of sales, so if this one comes to the other side, it will be minus opening stock plus the closing stock. So our cost of sales was
52.40.
it was 52.40. So it was 52.40, But remember that they said what is included under the cost of sales, under note 1. Cost of sales include depreciation and what? Loss on sale of a plant. So you have to reduce that. 640 minus 100. That one is included there. Then our opening stock is, remember that our opening stock is all about the inventory. as at 2012 of 1880. So 18A, 80, then 2840. So you have to raise 1880. You have to raise 1880 plus 2840. Plus 2840 there. So our credit purchases will be so if you add there, you are getting
5460.
I'm getting 5460. So after getting this 5460, you have to open your trade payables account. You have to open your trade payables account. So let us open trade payables account here. So you have trade payables account, the final account. So balance pro down. So balance pro down for trade payable. Go to your trade payable, check 2012. Give me the figure. So this
1460.
1460, 1750 at the end. We have 1460 and we have 1750. And you have to increase here with credit purchase. So the credit purchases we got is 5460. 5460. So that what they paid, amount they paid to suppliers, paid to suppliers is, so what you could have reduced here is all about if they were given discount received, but it was not there. So this one was not there. So they paid to suppliers what?